About 20 years ago, I saw a guy walking down the street looking pretty proud of himself. He had a t-shirt on and it said, "Economic rationalism isn't." 3 words, economic rationalism isn't. So what the shirt was saying is that economic rationalism isn't rational at all. I think the implied argument there is that it leads to unemployment, environmental crisis, meltdown, etc., etc. Now, as anthropologists, we're not really interested in whether that guy was right or wrong so much as trying to situate or understand the context in which he's making those kinds of claims. So what Rudnyckyj is doing in this article, which by the way is entitled Economy in Practice, is trying to understand what economic rationalism means, but the people he's studying are Malaysian experts in Islamic finance. So what he's trying to understand is what economic rationalism means to these people, and especially in relation to Islamic finance. And he uses an approach called economy in practice. And what he means by that is he looks at the way people involved in the economy understand the economy and put that understanding into practice. For example, I had a friend who was a real estate agent, and he told me that I must invest in houses because prices in houses only ever go up and up. So he had an understanding of house prices, which is going up, and an action, which was to buy as much as you could, invest as much as you could. So economy in practice, again, is your understandings of the economy and how those understandings affect how you act. So what are the perspectives that he's analysing? The perspectives he's analysing belong to experts in Islamic finance. These experts come from Malaysia, and they have a variety of approaches to economic rationality and where it fits in relation to Islamic finance. At one extreme, there's a sense that economic rationality and Islamic finance are very different, and a lot of work needs to be made to reconcile the two. And at the other extreme, one person he spoke to by the name of Ahmad feels that in fact Islamic finance is based on the idea of economic rationality, that economic rationality is at the heart of Islamic finance. So to start with, to get to this point, Rudnyckyj gives us a story that he's heard in many places while he was doing research in Malaysia. And the story goes that there are employees of a large commercial bank in Malaysia who are contacted by a rich Saudi, and the rich Saudi man says, "Oh, look, I want to invest my $100,000 US with you. How much interest can you give me?" And they say, "We can give you a return of 5%. And the Saudi guy says, "What? If I go to New York, I can get something like 7%. And the Malaysians say, "Well, if you invest with us, you get 5% and you get to go to heaven." The rich Saudi guy, nevertheless, goes to New York with his money and invests it there. So what is this Islamic finance that the bankers in Malaysia were trying to spruik? Rudnyckyj defines it at the top of this page as partnerships or trade sales that avoid interest-bearing loans. So just say you've inherited $1,000 and you don't want to spend it right now. You want to save it and make more money out of it. There are two basic ways you can do it. One is you can go to, for example, a bank and deposit your money with the bank and get, a 10% return on it in 5 years. So in 5 years you get $1,100 back from the bank. And that's an interest-bearing loan, or you could call it a financial instrument. A kind of financial instrument that is an interest-based. Another thing you could do with your $1,000 is go to your friend who has bought a car. He needs a bit of help paying off the car. The car cost him $2,000. He's only got $1,000. And he says, "Look, if you give me your $1,000, I will give you 50% of the returns I make, or the profit I make from delivering pizzas, because I'm going to use this car to deliver pizzas." So what you get there is a share of his profits. You have a share of his business too. You have a 50% share or stake in his business, and that's called an equity. You have equity. So there's two kinds of financial instruments typically. At a very basic level, there's interest-bearing instruments, a loan to the bank. Basically, when you lend the bank money by giving them your money in savings account, or an equity-based arrangement, an equity-based instrument. Typically, Islamic finance is understood as being equity-based. That is, the instruments of Islamic finance are not based on loans and debts, but rather taking a share in somebody else's business. Now, while we are discussing definitions, we also need an economic rationalization definition. For Rudnyckyj, it is the application of market calculations to institutions and actions on the basis of considerations of profit and loss and cost-benefit analysis. So the idea is that you look at something and see if it's going to be profitable for you, and then if it is going to be profitable for you, more profitable than any other action, you undertake that action. And you apply that principle to your own actions, to your family, to the group, and then to the nation, and then to the whole world. What Rudnyckyj observes is that Islamic bankers and experts in Islamic finance obsess about this idea of economic rationalism. They're always thinking about it and trying to understand it. Okay, now Rudnyckyj moves to his methodology in this section entitled Reflexivities. And here he introduces the notion of economy in practice. And he says, when we study economy in practice, we study how participants understand the economy. For example, how they understand terms like economic rationality. And what makes studying how people understand economy so fascinating is that the understanding of economy affects how we act in it. For example, people who believe that house prices only ever go up will borrow like crazy to invest in houses. So our understanding immediately affects the way we act in the economy. But it also emphasizes that our way of thinking and acting in the economy are situated in relation to our cultural upbringing. If, for example, our parents bet on the horses and bet on football matches, it's more likely that we will do that kind of financial undertaking when we get older. Or if our parents are mad keen investors in property, then it's more likely we'll be investing in property and shares. That's a simple way of putting it. But it's also a cultural thing. We find that within different cultures you can find different understandings of the economy, and from that you get different kinds of action that emerge. So economics, our understanding of economy doesn't just describe the world as we see it, but also constitutes our world, our economic world. What can make our understanding of the economy misleading is economization. By this, Rudnyckyj is talking about our tendency to see only certain parts of the economy, such as the share market, going shopping at the supermarket, as economic, and ignoring other aspects of life. For example, a friend of mine mows my lawn. I'm now indebted to him when he wants to put up his Christmas decorations. I don't necessarily see that as part of the economy. However, from an anthropological perspective, it is deeply economic. So the idea here is what me as an Aussie guy, or what the guy with the economic rationalism isn't t-shirt on, or what my real estate agent friend said, or what these Islamic bankers we're going to find out more about soon say. All these things are different ways of understanding and constituting economics. They're not necessarily a reflection of some real economy out there. So my examples aren't too good, but Rudnyckyj gives a great example here about an analysis of the marketization of poverty. So there was a program for poor people to help poor people get rich. And what it did was to give them things like probably mobile phones and loans, with the assumption that they were natural entrepreneurs. That the assumption there is that people as individuals are born with a natural entrepreneurial spirit, and the reason why you are poor is that perhaps things get in the way of that entrepreneurial spirit developing or being allowed to express itself. So the way to address poverty, according to this failed project, was to give poor people access to the market and capital and so on. Another good example was of a Japanese securities trader who was very excited by the possibilities of economic rationalism and thought that he could use those principles, to extend it into other realms, for example, into religions, into golf courses, making golf courses more effective. You can buy up old, ineffective, unprofitable golf courses and turn them into profits. So this study of economy in practice is part of a larger study of modernity, which is something most sociologists and anthropologists are fascinated with. Like, what is it to be modern? What changes in the world occurred and are occurring with modernity? And one of those changes, we think, is reflexivity. One of the central characteristics of human life and thought after, let's say, 1600 has been reflexivity, that we reflect upon ourselves, we are aware of ourselves in a way that we weren't prior to 1700. So these Islamic bankers are reflective. They reflect on their own actions of being involved in the world of finance and trying to reconcile the ideas of Islamic finance and economic rationalization. This might sound a bit obvious and take it for granted, but if you take the example of, say, a small trader in 1300s in England, or kids down the street who are selling lemonade, I don't think typically they reflect on their own activity as being involved, for example, in looking for profit margins and in worldwide economic capital. Okay, so this idea of economy in practice is the methodological approach that Rudnyckyj is bringing to his study of Malaysians involved in Islamic finance. I've been yapping on for a while. It's time to finally get to the point, which is about Malaysia and the globalization of Islamic finance. So Malaysia itself, the government, is pushing to be at the center of the growing world of Islamic finance. So if you go to Kuala Lumpur, the capital of Malaysia, you'll find it covered in advertising for Islamic finance, such as shown in these photos here. And this can be seen as part of, firstly, Malaysia becoming one of the tiger economies of Asia, I should say, along with Taiwan, Hong Kong, and so on. But also as a response to the Islamic Revolution and a growing Islamic awareness and drive for Islamic principles, which is sometimes known as the dakwah, which dates back to the 1970s. So since this period, Malaysia has pushed for a dual banking system, to have a conventional Western style banking and also to have Islamic finance. And the idea is to use this Islamic banking to create a Melayu Baru, a new Malaysia. The new Malay citizens would be conducive to economic growth and would be self-disciplined, able, and wealth accumulating. So Malaysia was one of the first countries to implement this new Islamic finance and is part of a larger goal, firstly to create a Muslim Malay middle class, so to transform Malaysia in the 1970s from a rural peasant society into a modern industrial society, but also an attempt to modernize Islam and to make it conducive to capitalism. Furthermore, Malaysia sought to take advantage of its position between the Middle East and Southeast Asia. So it's got a traditional relationship of Islam with Southeast Asia and a proximity to Southeast Asia and to China eventually, and the rising economy there. So you can see that these far-sighted policies from the 1970s still play out today, 40 years later. And thus, the Iranian Revolution and the Islamic call to faith, or da'wah, still have important repercussions in Malaysia today. But what Daramir Rudnyckyj is focusing on particularly is the effects of the banking system. And that is the establishment of Islamic banking standards, and especially bonds. These bonds, or sukuk, are an Islamic style of financial instrument. And as Rudnyckyj observes, today 2/3 of sukuk issued globally are denominated in Malaysian ringgit. So what that gives you a sense is that Malaysia is at the center of Islamic finance worldwide. So now as we get into the detail of Islamic finance, Rudnyckyj provides us with a more precise definition. Islamic finance refers to the management of money and the provision of capital in a manner that complies with Islamic prescriptions on commercial action. However, there is a lack of consensus as to what counts as compliance and exactly what qualifies as permissible economic action. The rest of this article, in fact, will be concerned with that lack of consensus and the debate over what qualifies as permissible economic action. Most agree that collecting interest, riba, is one of the worst sins. So if I return to that example, you have $1,000, you put it in a deposit in the bank, and the bank gives you 10% return, $1,100. 5 years later, you have committed a sin according to Quranic prohibitions. And in fact, some people think it's 36 times worse than adultery. So what Islamic finance, in a general idea, aims for is real, not speculative transactions. So when I deposit my $1,000 in the bank, I'm speculating that the bank will be okay and that it will be able to invest my money wisely and other people's money wisely and return it and 10% more in 5 years' time. But I'm speculating there that will be the case. In order to avoid this speculation, which Muhammad stated was worse than committing adultery, the alternative is to engage in real rather than speculative exchanges. And a real exchange would be, for example, investing your $1,000 in your friend's car and pizza delivery service. And in fact, some of the people that Rudnyckyj spoke to blamed GFC on speculative type transactions. So the idea is if there had been more equity-based rather than interest-based instruments in the world market, there wouldn't have been a global financial crisis in 2007, 2008. This idea that obtaining interest is somehow sinful or morally wrong, in fact, has a long tradition outside of Islam and in the West. Readers of Tausig and most Marxist anthropologists would be familiar with Aristotle's claim along the lines of, if you purchase a pair of shoes to wear on your feet, you are putting them to good use. But if you purchase a pair of shoes and put them in your cupboard in the hope that in 10 years they will become collector's items that you can sell for 10 times the price, you are putting those shoes to bad use. And when you put your shoes in the closet and hope, if you buy a new pair of Nike now, a special edition pair of Nike, and put them in the closet and expect them to earn interest, you're speculating. Now, to avoid speculation, what Islamic bankers say is that exchanges should share risk, be grounded in real production, and also involve risk transfer. So when I invest my money in my friend's car business, I'm doing everything, provided the pizzas don't, there's no pizzas with pork on it, so let's say the pizzas are halal pizzas, everything is in line with Islamic prescriptions. We're sharing risks. If he crashes his car and goes out of business, he loses and I lose. It's grounded in real production. He's not making the pizzas, but he's producing a service, which is the delivery of pizzas. And there's a transfer of risk from him to me, that we're sharing the risk. As far as most Islamic people who take an interest in these things would say, that is the ideal form of economic instrument. And what makes it so ideal is the sharing of risk, the lack of speculation, and also the fact that it makes a bond or a connection between me and my friend. We are now closer because we're involved in business together. when I go and buy a pair of Nikes for $1,000 and lock them away and hope that they'll be worth $10,000 in 10 years. There's no real relationships built between me and people. If anything, it's adversarial, because the person who comes to buy it in 10 years will want them for less, and I want to get more out of him or her, etc. Alright, finally, after all this blabbing, I've got through the background and context, which admittedly is not simple. So let's get down to the people themselves. Let's hear what they have to say about Islamic finance. The first guy he speaks to is Dr. Abbas Mirakor, we'll just call him Mirakor, a former director at the IMF. That's pretty amazing, and one of the world's leading authorities on Islamic finance and economics. Now, what does Mirakor say? He basically says that Islamic finance is a way of providing capital on the basis of risk sharing and equity investment rather than interest-bearing debt. So we're familiar with this idea now. The risk sharing and equity investments, when I put $1,000 in my friend's pizza car business. Interest-bearing debt is when, for example, I deposit $1,000 in the bank, and the bank now owes me $1,100 in 5 years' time. According to Mirakor, this enables economic growth and poverty reduction. So Mirakor takes what we could say is a standard position on Islamic finance. Next, Rudnyckyj tells us about his own lecturer. He took a course in 2010 on Sharia law in Kuala Lumpur's financial district, not far from Malaysia's central bank. And in one meeting, the professor, Dr. Sharif, gave an overview of the major contracts used in financial transactions permitted by Islam, including Bai Salam and Istisna and Ijar. Okay, Dr. Sharif had an interesting take, which he explained to Rudnyckyj during a break during the lecture. Rudnyckyj asked Dr. Sharif, why did you focus so much on this idea of transparency? And he told me the reason was to avoid any appearance of uncertainty, because uncertainty had the potential to lead to disputes, acrimony, and ill will. He explained that this aim was consistent with the balance Islam sought between the interests of individuals and communities. He claimed that these aims were not followed by Malaysia's Islamic banks, and would regularly shout at our class in exasperated tones, "Just look at what they're doing," when addressing their products. He claimed that the banks interpreted their own injunctions to avoid uncertainty as a rationale to protect their own profits, but did not take into consideration the bigger message behind those injunctions. For Dr. Sharif, the bigger message was attention to social teachings of Islam. So Dr. Sharif is for risk sharing, for transparency in agreements, and for that reason he feels he is opposed to the form that Islamic finance has taken in Malaysia. So Dr. Sharif is what you could call a reformer. He's seeking to reform Islamic finance. And what these reformers are trying to do is to advance well-being and avoid investment in sectors that are contrary to Islamic morality. For example, the making of weapons, making of pornography, and activities that involve the collection of interest. Now, fascinating as these points and opinions from Dr. Sharif and Dr. Mirakor, Rudnyckyj is interested in something else, which is how they frame economic rationality and what using the approach of economics in practice can tell us. What Rudnyckyj observes is that Mirakor and Sharif continually reflected upon the idea of economic rationality as a way of understanding what is and what is not particularly acceptable action within Islam. Now, what makes that difficult is that different schools within Islam, it's called fiqh. There are generally agreed to be four fiqh schools, four schools of interpretation. And there are different takes on what is acceptable within Islam, which kinds of financial instruments are acceptable. Okay, so we get to the point now of the bay al-inah. To explain that, you need $1,000, and all you have is a very good paper stapler. So you go down to High Street in the town. You start off not with an Islamic finance institution, but you start off with a pawnbroker, and you walk in, and there's this guy with a moustache covered in gold necklaces who calls himself the porn star, I think. You walk in and you say to the guy, here's this beautiful stapler, give me $1,000 for it. You pass over the stapler, he gives you $1,000 and says, when you want to buy your stapler back, it's going to cost you $1,400. So 2 weeks later, you want your wonderful stapler back, and you've used your $1,000 for whatever you needed, and your pay's come in, you've got $1,400. You go and buy the stapler back. The pawn broker is happy because he's made his $400 margin, and you're happy because you had the credit of $1,000 when you most needed it before your paycheck came in. All right, the next time this happens, you decide to try something different. You go to the Islamic bank next door and you ask for a bay al-inah. What you do is you sell your stapler to the banker for $1,000. He immediately sells the stapler back to you for $1,400. So now you've got $1,000 in your pocket, which the banker used to buy your stapler off you, and you've got a stapler and you owe the banker $1,400, and you can pay that back over the next few months. So what you have is a kind of loan, but dressed up as a sale. To some outsiders and even to some Islamic experts themselves, the bay al-inah is a kind of joke. Basically, you get $1,000 off the bank and you promise to pay them back $1,400 later. What the bank has given you is exactly a $1,000 loan. You owe them the principal $1,000 plus interest of $400. So the total is $1,400 that you owe the bank. So it looks very much like a loan that is just dressed up as a purchase. I hope I've got that right. And if I haven't got it right, maybe I have actually created a new kind of financial instrument. So let's go through these again, because you like me are probably an art student not studying finance, and it's all a bit confusing. I need $1,000. There are 3 ways I can do it. Number 1, I go to a pawn shop. I give them my very good stapler. They give me $1,000, and I promise to come back in 2 weeks with $1,400 in order to get my stapler back. They keep the stapler as a kind of surety. That's option number 1. Option number 2 is I go to an Islamic bank. I bring them my stapler. They buy my stapler off me for $1,000. So now I've got $1,000 and they've got the stapler. Now they sell the stapler back to me for $1,400. So now I've got $1,000 in one hand, I've got a stapler, and I've also got I don't have $1,400, which I must pay back to the bank at a later date. And then if I don't want to do Islamic finance, there's one more way I can do it, which is I can go to a bank and say I want $1,000. They say, sure, but you'll need to pay us back $1,400 after a certain period of time. And if they don't like the look of me, they'll ask for some surety, and I'll say, well, here's the stapler, you can use that as surety. So there are different financial instruments as they are known. One is pawnbroking that we're kind of familiar with. The other is bay al-inah, and the other one is a loan from the bank. So you can see why the bay al-inah would frustrate those Islamic scholars who are looking for an alternative to economic rationalization. They see it as just the same as the kinds of financing arrangements that you get under economic rationalization, where they're looking for profit and loss sharing agreements rather than credit agreements. And for them, the inah is classically a debt-based instrument rather than an equity-based contract. For these reformers, quote, the imperative toward economic rationality is the problem, and Islamic finance is supposed to present a solution. Risk sharing and mutual interest contracts where everything is above board and clear is the solution, not self-interested or debt-based economic rationalism. Okay, so now Rudnyckyj moves on to a couple of Islamic finance experts who feel that economic rationalism lies at the basis of Islamic finance, who don't feel there's a contradiction between economic rationalism and Islamic finance. And the first one he refers to is Shafii Ahmad, a superstar Islamic banking executive. Ahmad could be located in the fiqh or interpretive tradition of Islam. Remember I talked about the 4 schools of fiqh before, so he belongs to one of them. And he advocates debt-based contracts. So he thinks the sorts of things where you make a loan from the bank is quite okay. The reason for that is he feels that equity-based contracts are more risky. So if we go back to my $1,000 before, it's probably better that I deposit it in the bank and wait for interest to accrue than to give it to my friend and take a stake in his pizza delivery business. It's better to be involved in debt-based contracts than equity-based contracts. And the reason for this is that he feels that equity-based contracts are more risky. And everybody is clear, almost all thinkers of Islam are clear that gambling is definitely a sin, but one of the characteristics of gambling is that it's risky. Now, according to Ahmad, equity-based contracts are the risky ones. And if you think about it, a lot of people would say buying shares with your money is riskier than putting it in the bank. So according to Ahmad, debt-based contracts are superior. So Ahmad goes against what is the commonly accepted idea that Islamic finance is about equity rather than debt-based financial instruments. And he's very clear about the idea of profit. At the end of the day, he says, Islamic banking is driven by maximum profit. I asked him how he reconciled this perspective with Islam's emphasis on justice. He responded that although Islam seeks to strike a balance between profit and social responsibility, Islamic banking is a pure business that must protect the interests of its shareholders and therefore seeks maximum profit. So profit comes first. Now an even more fascinating idea comes from Hamza, who is executive at a Islamic finances firm and later becomes a CEO of a foreign Islamic bank. Hamza feels that market rationalization, that economic rationalization, economic rationalism is intrinsic to Islam. Now, as I understand it, according to Hamza, the reason why gambling is a sin is that investors don't properly take account of the risks. So if I have a poker night with my friends, I'm not really aware or properly accounting for the riskiness of the venture that I might lose my $100. Taking a risk is fine. That's exactly what Islam or Islamic banking is about, is taking a risk. But you have to do it responsibly, weighing up the pros and cons. So anything like the state intervention to help banks, support banks, has to be stopped. The true way for Islamic finance is laissez-faire, winner takes all, no government involvement, and a free banking system. And the problem with Western finance is that it's not free enough. There's too much government intervention. People don't bank responsibly because they realize that if the bank fails, the government will step in. The government shouldn't do that. The only problem, according to Hamza, is that it doesn't allow people to take the risks that are required to make a profit. So Islam is happy for you to make a profit. Islamic teaching is happy for you to make a profit as long as you take risks and you're aware of the risks. Islamic finance necessitates risk-taking with state guarantees of deposits. If the state guarantees your bank deposit, it's not a true risk-sharing relationship. And according to Hamza, Islamic finance is more true or more authentic to market rationalism than even the US. And so he says, and this is I think one of the great quotes from this article, the neoliberal Chicago School of Economics is in fact Islamic in principle. Milton Friedman was actually a proponent of Islamic finance because Milton Friedman, like true Islam, holds that profit is only legitimate if one incurs risks. So Islamic finance must comply with Islam, and the tenets of Islam are the precepts of economic rationalism. Economic rationality is clearly and already intrinsic to Islam. Now, like Ahmad, Hamza feels that Islam and economic rationalism are very close, but unlike Ahmad, Hamza feels that equity-based instruments, like when I take a share in my friend's pizza delivery business, are good because they encourage individual responsibility. When you get involved in a friend's business, you tend to weigh up the risks more carefully than when you deposit money in a bank. And now I think it's good to read out this entire paragraph because I think it gets to the summary of the article. These debates over form and content, over debt-based and equity-based contracts, and over the relationship between economism and Islam illustrate how Islamic finance experts pose economic rationality as a problem. Because debt-based contracts closely resemble existing interest-bearing loans, think of that buy al-inah example I talked about before, conventional bankers who are transplants to Islamic finance and constitute the majority of managers and executives in the industry have found them especially easy to work with. Thus, bankers like Ahmad are content with debt-based contracts because little new knowledge is needed to deploy them. Principles from conventional accounting denoting credit and debts can be easily imported to make clear balance sheets. In contrast, the mudarabah, and I haven't explained them, but they're a complex Islamic financial instrument, are quite cumbersome and require a wholly different method of accounting from that practiced in the conventional system. While reformers problematize market reason, other practitioners see it in different terms. They either represent it as a universal norm to which Islamic finance must conform, and that's Ahmad's view, or as already intrinsic in Islam, and that is Hamza's take. So the question the reformers ask themselves is, to what extent, if any, do we need to change the world of finance to fit it to the teachings of Islam? The reformers, the first three thinkers we looked at, including the one who was shouting at Daramir and the students, seek to reform Islamic finance along the principles of profit sharing, and their idea is not a sort of independent sovereign subject engaged in the market, but sharing risk and developing bonds and relationships between people. To put it another way, in the liberal economic vision, there is a sovereign subject who goes out and takes risks to maximize its own profit, and the first three reformers we look at rally against this idea. They seek an alternative model for Islamic finance, which is based on equity instruments, such as taking shares in somebody else's business and developing relationships between. So now we move to the conclusion. Islamic finance should not be taken as the irreducible other of market reason. What Rudnyckyj has shown is that there are a variety of approaches to the relationship between market rationalism and Islam. Some reformers see it as opposite to Islam, and some Islamic bankers see economic rationalism as intrinsic to Islam. In order to capture this, Rudnyckyj has used this economy in practice approach, which shows how research subjects represent themselves and reflect on the economy itself. As he shows, their visions are not so much a reflection of objective reality, but they are visions upon which they take actions in the real world and change the economy of the world by creating, for example, new kinds of financial instruments. Put another way, the way they understand economic rationalism has an impact on the practical instruments they devise in order to realize the dream of Islamic finance. If you think about it, this idea is not so radical. If I believe it's going to rain, I take out an umbrella. So there is often a clear connection between belief and practice. And you get from one extreme, where Ahmad is saying that economic rationalism is commensurable and intrinsic to Islam, to another extreme where you have Doctors Mirakur, Sharif and Mustafa, who see Islamic finance as something that can offer an alternative to the financial system as we know it. Now, Rudnyckyj sees this as having larger implications for the way we think about economy as anthropologists. In the earlier decades, we have assumed or questioned whether economism and market reason is embedded in society. And we've asked whether economic calculation, self-interest and rational choice were essential attributes of human beings. But what Rudnyckyj is doing is make another set of observations. The historicity of the object known as the human. Recent anthropological work has focused more on the norms and knowledge through which the human is created, rather than a search for its essential nature. So what Rudnyckyj has shown is the norms and knowledge about economic rationalism form and create human subjects. So we can see the techniques through which humans are rationalized according to the principles of market liberalism. Some adopt this idea of economic rationalism and others reject it, and those others seek alternatives to this imperative of market liberalism.